Hello, this is CryptoFox. Today, I will talk about how to use not just one, but two Bollinger Bands indicators that many people use. I will be introducing a total of two trading methods today, so please watch closely. Please subscribe and like to my channel, and let's get started right away. To use these trading methods, you will need to use the Trading VU. This time, we're going to use two free Trading VU indicators. We will use one Bollinger Band 20 with 0.5 standard deviation and the other Bollinger Band 20 with 3 standard deviation. Now, let's set up the chart. The first indicator is the Bollinger Bands. Bollinger Bands is created under the assumption that price moves within a certain standard deviation around the moving average line. Please search for Bollinger Bands in the indicator search and add the built-in indicator. In the indicator settings, leave the length value at 20 and change the standard deviation to 0.5. I changed all the lines in the style settings to green. The second indicator is also the Bollinger Bands. This time, we will adjust the settings slightly differently from the first Bollinger Bands we added. Add another Bollinger Band and change the standard deviation value to 3 in the settings. In the style settings, deselect the middle basis line and change the remaining upper-lower bands to red. Now we have finished setting up all the indicators. Before getting into the trading methods, you need to know how to read the double Bollinger Bands. When the candle enters the range of the Bollinger Band with 0.5 standard deviation marked by the green center line, it is considered a neutral zone, and you should not enter a position, because this area could be indicative of a consolidation market that lacks momentum. If the candle is above the green center line, we call this area double Bollinger Bands by zone. Double Bollinger Bands sell zone is found when the candle is below the green center line. Now that we've looked at the basics of reading double Bollinger Bands, let's move on to the first trading strategy called Breakout Strategy. The first condition for entering a long position using the breakout trading method is that the market must be ranging while the candle moving up and down between the Bollinger Bands upper and lower bands. You enter a long position when the candle breaks through the previous high within the range. Set the stop-loss line at the lower line of the green neutral band and take profit at either 1 to 1.5 risk-reward ratio or when the candle touches the upper Bollinger Band. In this example, you can see the profit being taken at the 1 to 3 risk-reward ratio where the Bollinger Band's upper band is touched. Let's take a look at another long position example. The next example is the Bitcoin 15-minute time frame chart. We can see the price is within the ranging market. When the candle breaks through the previous high, you enter a long position. Set the stop-loss line at the lower band of the green neutral zone in the middle. In the following example, profit was taken at the 1 to 1.5 risk-reward ratio. Now let's look at the conditions for entering a short position using the breakout strategy. First, the candle must be within the ranging market without breaking through the upper and lower bands of the Bollinger Bands. Second, you enter a short position when the candle breaks through the previous low within the ranging. Set the stop-loss at the upper band of the green neutral zone, and take profit at either the 1 to 1.5 risk-reward ratio or when the candle touches the lower Bollinger Band. In the following example, profit was taken at the 1 to 1.5 risk-reward ratio. Let's take a look at another short position example. This example is also the Bitcoin 15-minute time frame chart. The candle moves up and down near the Bollinger Bands' upper and lower bands, forming a ranging market. When the candle breaks through the previous low, you enter a short position. Set the stop-loss at the upper band of the green neutral zone. Take profit at either the 1 to 1.5 risk-reward ratio or when the candle touches the lower band. In the following example, profit was taken at the 1 to 3 where the lower band was touched. So far, I've explained the first trading strategy. Now, let's discuss the second trading strategy called the 1 to 3 pattern strategy. Before learning about the 1 to 3 pattern strategy, you should first understand what the 1 to 3 pattern is. The conditions for the 1 to 3 pattern are simple. First, let me explain based on the ascending 1 to 3 pattern. Point 2 must be higher than point 1. Point 3 should not be lower than point 1. When the price moving up from point 3 breaks through the position of point 2, you enter a long position. The descending 1 to 3 pattern is the opposite. Point 2 must be lower than point 1. Point 3 should not be higher than point 1. When the price moving down from point 3 breaks through the position of point 2, you enter a short position. Now that we've learned about the 1 to 3 pattern, let's look at the trading method using the double Bollinger Bands. The first condition for the 1 to 3 pattern long position is that 1 to 3 pattern should be found. The second condition is different from the original 1 to 3 pattern, so be aware. Point 3 should be higher than not only point 1 but also the lower band of the green neutral zone. Third, enter long position when the candle breaks through the position of point 2. Set the stop loss at the lower line of the central green neutral zone, and take profit at the 1 to 1.5 risk-reward ratio or when the candle touches the upper band. In this example, you can see the profit being taken at the 1 to 1.5. Let's look at another long position example. The 1 to 3 pattern is found, and point 3 does not break through the lower band of the central green neutral zone. When the candle breaks through the position of point 2, enter a long buy position. Set the stop loss at the lower band of the central neutral zone and take profit at the 1 to 3 where the upper band is touched. Now let's look at the conditions for the short position. The first condition is the appearance of the 1 to 3 pattern. Second, point 3 should be lower than point 1 and not break through the central green neutral zone upward. Finally, enter a short position when the candle breaks through the position of point 2 downward. Set the stop loss at the upper band of the central green neutral zone and take profit at the 1 to 1.5 position or when the candle touches the lower band. In the following example, profit was taken at the 1 to 1.5. Let's take a look at one more short position example. The next example is the Bitcoin 15-minute time frame chart. The 1 to 3 pattern is found. Point 3 is not only lower than point 1 but also does not break through the central green neutral zone upward. Afterward, when the candle breaks through the position of point 2 downward, you enter a short position. Set the stop loss at the upper band of the central green neutral zone and take profit at the 1 to 1.5 position or when the candle touches the lower band. In the following example, profit was taken at the 1 mean position where the lower Bollinger Band was touched. Today, we looked at the breakout strategy and 1 to 3 pattern strategy using double Bollinger Bands. There are various trading methods using Bollinger Bands, but I decide to share these two methods with my subscribers because they are both easy and have a high win rate. I hope the trading methods I shared today will be of great help to all of you. There is no 100% perfect trading method in this world. Our job is to constantly find that one trading method we can use for a lifetime to reach our goals. If you enjoyed my video today, please like and subscribe to my channel, and I'll be back with another useful trading strategy next time. Thank you for watching today.